Stuart Jones joining us now in the studio, CEO of Sigma. Talk me through how this all works, Stuart, and what you're finding.
Well, first of all, thanks for having me, Hadley. So what we're trying to look at is we're trying to understand how can we really understand non-credit risk in financial institutions in a way that we haven't. And so why is that important? That's important because over the last several years, banks have paid $300 billion in fines for getting this wrong. So what we're looking at is we're looking at the governance, we're looking at the ownership, we're looking at the products and services, we're looking at the reputation and the transparency of these institutions, and we're wrapping that together into a consolidated risk score or a Sigma rating.
Yes, right here in the Middle East, this is an interesting place to be doing something like this because you have the U.S. Treasury so heavily involved now in really trying to watch what's happening in the banking sector when it comes to money laundering, when it comes to financing terrorism, when it comes to Hezbollah. I mean, all of these things are playing out here. What are you finding?
Well, it's a very serious issue. It's something that I worked on when I was the U.S. Treasury attaché out here. And it's something that I think that Treasury will be interested in looking at when we complete all of our ratings for the Middle East, all of our ratings on a global basis. One of the things, though, that we're finding is that financial institutions, broadly speaking, in the Middle East seem to be lower risk than some of the other regions we're looking at, such as Africa and LATAM. And one of the other things that we're seeing is that financial institutions in this region seem to be a little more transparent than institutions in Latin America, which was a surprise to us and a surprise to many of the folks that we talked to. We did an informal poll of bankers and asked them, where did you think the most transparent region would be? And they didn't say the Middle East, but I think that the data is backing up the reality, which is there are a lot of misperceptions about the region.
And Stuart, do you think this reality is well recognized by investors? Because when you talk about these key metrics, you're looking at transparency among them. To me, that seems that it would encourage more foreign investment to flow into this region.
Absolutely. When we look at statistics and we look at statements by the IFC, for example, a lack of transparency is a red flag for investors. And one of the things that we see in the major credit rating agencies is that they do a good job of covering the ability for an institution to repay, but that conduct risk, the conduct risk is equally important. In fact, many times more important than the ability to repay. And so, yes, if an institution has good conduct risk, if an institution is transparent, whether that's a bank or that's a non-bank entity, we see a correlation to more trust, and more trust is correlated to more strength and more support from investors.
And Stuart, we've been talking a lot about the MSCI inclusion for the Saudi market, getting closer to the Kuwait market as well when we talk about emerging market status. Do those act as levers really to help bring about some of these reforms that also contribute to getting closer to international standards and greater transparency within financial institutions?
Yes, Nancy, I think they do. I think those are really positive developments. I think that the governments in the region, back to when I was representing the Treasury Department here, are very keenly aware of how transparency and how meeting international best practice correlates to growth and correlates to investors getting comfortable here. I remember hosting a group of investors from U.S. academic institution pensions and pension funds in the region when I was with Treasury. And one of the things was that they didn't necessarily think that this was a good market for them to be in, but when they came out and saw it for themselves, they got very excited about investing in equities here. And I think the more transparency that happens, the more that governments and countries in the region reach international standards, the more likely it is that you're going to get those sorts of people out here putting dollars to work.
And Stuart, when we look at what's been happening out here in the region in the last several years in particular, we've seen the U.S. government really damping down on Hezbollah, on terrorist financing. There's been a big move to put U.S. Treasury in Saudi Arabia, for example, to work very closely with the Gulf countries. One of the things, of course, that they've done is really to go after Hezbollah. But what else do you see being accomplished there?
Well, I think the setting up of the joint terrorist tracking program, terror finance tracking program, was a big development that happened. That was announced when President Trump was in Riyadh. And as you said, putting more bodies on the ground out here is something that I think correlates to how much the U.S. Treasury Department, how much the U.S. government cares about this region. When I was Treasury attaché, I covered the entire Gulf. Now there are 3 people doing the job that I did. So either I was very effective or the Treasury Department has decided to triple down on its presence in the region.
So there's a big recognition that they are going to have to work with these Gulf countries in
Absolutely.
particular. Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.